Liz mentioned, look at software. I'm trying to think of people who are looking at days like today and thinking of opportunity, like you, who bought Twilio back.
I did.
You've had a long history with this name. It's down like 15% or something like that in the last month.
Trading it.
Why'd you buy it?
I'm trading it. I'm being tactical. You're speaking about noise. The noise, as I said, that's troubling is yields. The noise as it relates to the tweets. You pay attention to that noise because it's actually an opportunity. So in the case of Twilio, this is a company that has outperformed the software industry over the last 12 months by about 10%. So it has relative outperformance, which obviously I find appealing. In addition to that, in being tactical, technically this stock broke out. I rode that breakout at the end of the fourth quarter. I bought this name in early December, somewhere around 130. In January, when I saw that software was not going to see the mean reversion relative to semis and that the entire industry was going to get punished, I sold out of it at 137. Here we go. The stock approaches the 200-day moving average today, which remains supportive at 115. I'm a buyer at 119 with a very small risk and a really good point of reference below because I want to take advantage of the noise.
Brian, tech is leading the sell-off today, right? Not surprisingly, as yields pop, tech traditionally sells off. Dan Ives today says the bark will be worse than the bite. Goes to the broader point that we started the program with. Says he would be buying many of the Ives AI 30 names on the weakness today, and many of these names are down. NVIDIA, Microsoft, Palantir, CrowdStrike, Nebius, Apple, Palo Alto, Google, Tesla. Will the bark be worse than the bite? Do you agree with Ives? Buying opportunity for any of these names today?
I love Danny, as you know. Dan loves everything, and he and I argue about things sometimes. But I think tech had a precursor with respect to how it acted in the fourth quarter. We started to see increased dispersion and differing performance within the tech sector. Liz talked a little bit about it. Not all tech stocks are created equal. I think it might be too early. You might be buying a value trap in software, quite frankly. But I think from a thematic perspective, Dan is right in terms of focusing in on those particular names. But this is not a rising tide market anymore in tech, Scott. And I think that's what's going to be very different about 2026.